Okay, everyone, welcome back. So this is the third lesson in the order flow series, and I'm going to be going over a topic which is a non-negotiable. So at this point, you're either trading with supply and demand with order flow, or you're not. Right? So there's a big difference between trading the markets and understanding how markets work and simply gambling. So in this video, I'm going to be going over why supply and demand zones are king, and it's the only way to trade moving forward. So in this video, we're going to be going over a few things, right? So it's this idea of you only have one job, right? So you need to read and trade off supply zones and demand zones, right? Anything you're doing outside of trading supply and demand zones is interpretation. So instead of you trying to react to what the market's telling you, you are trying to predict, which is not how you trade. You have one job, and I'm going to repeat this, is you need to trade off supply and demand zones, right? There's no way to get around this. Every single time you take a winning trade, it is because you caught the right zone. And every time you lost, it was because you didn't catch the right zone. So I want to make it clear in this video that you don't have a psychology problem, you have a mindset problem. And the mindset problem that you face is simply the fact that you have not humbled yourself to understand how markets work. So hopefully in this video, I can try and make you understand that supply and demand is king. Hopefully I can do my best to try and help you understand that. So we're just going to define a few basic terms here, right? So what is a supply zone? So for those who haven't watched the first two videos, I highly recommend you go back and watch those because I go over what a footprint chart is and what order flow actually is. So in this video, I'm going to assume you have a basic understanding of what order flow is, and we're going to be going into why supply and demand zones are probably the reason as to why you are not profitable. And what I mean by that is, for example, right, let's take a sell trade. Now, if you take a sell trade, for example, and price actually sold off, it's not because you caught the sell trade with accuracy. It's because you happen to be trading at a supply area. And so a supply area in this context of trading, or just in general, right? When an instrument or a stock or any of these things is selling off, right? When supply exceeds demand, the price of that market will go down. So in other words, when there's an oversupply, the value of a stock or any instrument you're trading will fall. Right, so here you can see ES futures or the S&P 500 futures. So I want you to just pay attention to, again, I'm going to assume you understand what this actually means. We're going to be going into that. We're going to be going into this in more detail. But what you can see here is price breaking below the zone and price retesting into the zone. Now, this is what a supply zone looks like, or this is what a resistance looks like. So if you are trading any strategy, you have to understand what a supply zone actually is, right? If you want to sell or short the market with any kind of success, you need to understand why shorting occurs and why a stock or instrument goes down. And if you don't know that, then there's no point fixing psychology, right? Because psychology or good psychology cannot be built on terrible or non-existent technicals. And so again, a supply zone is simply an area where supply exceeds demand, where selling pressure exceeds the buying pressure, right? We're going to be going into how you can read that. But if you've watched the previous videos, you will know that there is a lot of aggressive buyers, right? So this blue inside the candle represents there's more market buy orders than market sell orders. And this is the main reason why the market moves down. In fact, it's the only reason why any market moves down. There is an oversupply. Now, vice versa, if we flip the script, if we look at what a demand area is, right? When price, I've got the wrong definition here, but when the buying pressure exceeds the selling pressure, the market will move up. And so mind the definition here, that's wrong. But a demand zone is when you see a lot of these aggressive sell orders and breaks higher. A lot of aggressive sell orders and breaks higher. And so to understand what a demand zone is think of it as the opposite of a supply zone. So in a supply zone, you have buyers that fail. In a demand zone, you have sellers that fail. And if there's one thing you want to take away from this entire video is that you cannot trade without understanding supply and demand, because every market in the world moves off supply and demand, right? So forex, futures, commodities, crypto, Bitcoin, any stock or any instrument, the underlying principle as to why the markets move up and down is supply and demand. And so I've made this slide. I had this slide in the previous video. I'm going to refer to it again, right? So supply and demand is kind of what moves the market. But there's common concepts that you hear, and I want to kind of clear the air up on this, right? So moving forward in 2026, if you are trading, you need to understand how the markets work, or probably click off this video and just quit trading as a whole. You cannot trade liquidity without understanding buyers and sellers, right? Because liquidity is everywhere. Liquidity is generated every second or every minute, right? Every 1 minute candle has liquidity above or below it, right? Every 1 minute high, 5 minute high, 15 minute high has liquidity printed above or below it. So it's such a commodity at this point that sweeps of liquidity don't mean anything and you do not require them to actually trade. What a sweep actually represents is an area of supply or demand, right? So supply is when aggressive sellers fail, and demand is when supply is when aggressive buyers fails, demand is when aggressive sellers fail. And so understanding those two basic concepts will allow you to seep through the noise. So sweeps of liquidity, right? What do sweeps of liquidity represent, right? Well, they don't represent anything without order flow. Same with market structure shifts, right? So typically when you're looking at a market structure shift, right, one of the biggest problems I see is that traders will often confuse a market structure shift with an entry when a lot of the times they've missed the actual move, right? A market structure shift is what happens after the trade actually happens. So you want to see what's going on in specific zones and then make your decision after the market reacts to those zones, right? You do not want to be caught up trading any of these concepts. So liquidity sweeps, market structure shifts, fair value gaps, and inverse fair value gaps. These are some of the most famous concepts that I've heard. Now, the truth is, you cannot trade them alone, right? You can use these concepts in conjunction with order flow. But I've often said the analogy that I've given is that trading is like a moving dartboard, right? So without order flow, you're putting a blindfold on. You're never going to be able to hit the target or hit as many bullseyes as you want, right? So you want to kind of slow things down. You want to understand supply and demand. And then once you understand how supply and demand works, you can pair that with any strategy that you decide. So that's the same with sweeps, with breaks of structure, with fair value gaps. Now, support and resistance, I went through in the previous video, and support and resistance is analogous to supply and demand, right? So a support zone is a demand, right? So that's kind of the bottom image you see over here. This is a support, right? This is how a support actually forms, right? A support zone will form when there's more aggressive sellers that don't break below a zone. Now, in later videos, we're going to discuss how I find those zones, right? But for now, you want to understand this is a support and this is a resistance. And so a resistance forms when the aggressive buy orders fail, right? A demand zone forms when aggressive sellers fail. So you need to understand these basic concepts whenever you trade. And the last is trend lines, right? So you cannot draw a wonky line and expect the markets to hold that line, right? That's simply not how you trade, right? So if you trade any of these concepts, you're missing the fundamental piece, which is coming back to your only job is to read and trade off supply and demand zones, right? Everything you do outside of that is a mere interpretation. So in other words, it doesn't work. It's pretty much a gamble. So you want to understand aggressive buyers failing, you want to understand aggressive sellers failing, and you want to then combine it with whatever nonsense you want to use. It's all nonsense unless you can understand order flow. So again, a quick recap. If you haven't watched the previous video, I highly recommend checking it out. I break down what footprint charts are. Now, footprint charts have obviously a left number and a right number, right? The left number is the bid, the aggressive sellers. I won't get into that in this video. And the ask is the aggressive buyers. And so the numbers you see inside of the footprint chart, so that's going to be these images here, right? The numbers you see inside of the footprint chart will tell you in real time whether buyers or sellers are aggressive and hence who is being absorbed. And so your only job as a responsible trader is to take the data and understand how it works, right? That's the only thing you need to do. So the analogy I want you to use, right? So, again, I touched on this in the last video, so I'm just going to touch on this again. The market is a story between buyers and sellers. The only thing that will give you long-term success, and the key word there is long-term success, is to understand how to read. And so you need to understand and read the main characters. And so the main characters are these. Now, what I want to kind of go through in this video is how these two main characters, the aggressive sell and the aggressive buy orders, correlate with supply and demand, right? So that's what I want to go through in this video. So once again, support and resistance, you don't find the zones, you don't wait for multiple taps, you don't look for multiple zones that have been respected, you don't eyeball the zones, you don't use ICT concepts, you don't use large looking candles or impulsive candles, you don't use any words or terminologies outside of basic supply and demand, right? So where are the aggressive buyers, where are the aggressive sellers, right? So why does supply and demand actually matter? right? So this slide, I'm going to try and get into your brain why supply and demand matters, because at the end of the day, if you're looking to trade a market, you need to understand how it works. And so I made a post recently that went pretty viral. I said those who trade order flow will pay those who don't trade order flow, because we understand trading is a zero sum game. The winners pay the losers. It's a circulation of money. It's not value. It's not money added, right? So if you're not an order flow trader, right, your sole purpose in the market is to pay those who trade with order flow. And so I'm going to say that again. Those who trade without order flow will become the exit liquidity for those who do, because those who trade with order flow actually respect how the market works, and also they respect themselves, right? They understand that if you're in a game, if you're up against $1 trillion market, you need to understand how it works. And so if you don't understand how $1 trillion market works, you cannot just come in and start guessing and gambling on candles. You can't do that, right? If you want longevity. If you don't, that's cool too, right? You can be the exit liquidity for those who do. So price isn't random. It moves when there's an imbalance of supply and demand. So when there's an oversupply of a forex pair, a stock, an instrument, a commodity, even Bitcoin, when there's an oversupply at that price, that the market will drop, right? When there's an oversupply at that area at that time, the price will drop. And when demand is greater than supply, when there's a demand for something that outstrips supply, the price of that will rise. And so, from an order flow perspective, understanding where buyers and sellers are will allow you to loop back and understand whether you have an oversupply or whether you have an over demand. So if we just take a look at the image here on the right hand side, you can see here what I've circled, a lot of red inside the candle. So once again, what does that red represent? Well, it's the aggressive sellers. So when you see red, there's more aggressive sellers. And so when you understand things from a footprint chart perspective, the more aggressive sellers there are, right, and the higher breaks we have, the more aggressive sellers that we have, the more likely it is that price is actually going to reverse to the upside. Now, this is a classic demand zone creation over here, right? So this is the aggressive sellers failing to break price below the zone. So this is the top of the zone and this is the bottom of the zone. And so if these aggressive sellers are, of course, aggressive, we can see red delta and we see a break higher. Then we see another retest and break higher. We're seeing a retest and a break higher despite having a huge amount of aggressive sellers. Now, as a trader, you want to kind of interpret this as sellers are being aggressive, but sellers are failing. So what's going on here is that sellers are being absorbed, right? I'm going to talk about absorption in later videos, but this is essentially how demand is created. Demand is created when sellers fail. So you kind of want to invert your thinking here. If you're looking to take a buy, right? You're looking for the market to generate demand or create that demand, right? So that demand is created when sellers are absorbed. So in other words, sellers are aggressive, right? Via the red delta. Sellers fail, and when sellers fail, that means that there's an absorption of those sellers. We call them passive buyers, and that's what creates the demand. And so every single support zone forms in this way, and every single resistance forms in the opposite way. So if we just take this now to the charts, right? Let's take the ATAS platform, right? So this is just a couple of examples here of how to kind of pick supply and demand, right? So this is ES futures on the 5-minute chart. So what we had over here, we had extreme chop over here. We had a nice kind of meltdown over here. So we want to try and understand what was going on here. So when you see the market moving down, it's very easy to look in hindsight and say, oh, there was a market structure shift, there was a fair value gap. But the problem is none of these concepts work because in real time you have no clue what's going on, right? You cannot have a long-term career in trading by guessing what candles are going to do, right? You can't do that. So I'm just going to go back to sort of this slide over here, right? We're going to use this slide in a lot of detail. This one here. So, for example, right, a sweep of liquidity. Let's discuss what that means. A sweep of liquidity doesn't mean anything, right? Because there are multiple sweeps, right? So, for example, all of these candles here, right? This one here, there was liquidity. There were sweeps here, right? You can argue there were sweeps everywhere, right? There's every high and low has a sweep. So what gives you the indication to take shorts here? Well, there's two main things. So for those who are paying attention at the start of the presentation, right, what you'll notice, what I said at the start was you have basically one job split up into two mini jobs, right? So you need to find zones and you need to understand whether they're supply or demand. Now, for the sake of this video, I've not gone over how I find the zones, but I'm trying to explain to you that once you hit a zone, right, these zones are very reactive. So, for example, price was acting as demand in this particular zone, and price obviously then reacts as supply in this particular zone, right? So, how do we understand if this is a supply area? So, what we want to do is we want to move away from traditional candlesticks, and we want to understand what's going on inside the candles. Now, here's what's interesting, right? Even before we look at the actual numbers, right? Let's go back to the definition, right? So this is a supply area. So what does a supply area look like, right? So a supply level is where selling pressure exceeds buying pressure. So when there's an oversupply of a stock or an instrument or any other market, the prices of that instrument or stock will fall, right? That is exactly what's going on here. That's exactly what went on here, right? So the market drops, right? The market dropped, right? So what was going on in this key level to make it drop? And so I'm going to assume that you have some basic footprint chart knowledge, right? But if you don't, let's quickly break this down. What do you see in all these candles, right? So specifically this one, this one, this one, this one, this one, this one. Right, so let's just say these four. So 1, 2, 3, 4, and maybe 5, right? These 5 candles here, right? What do you see inside the candles that you can't really see from regular candlestick charts, right? So what you see here is a lot of blue delta. Now, what does blue delta represent? Let's go back to our presentation. So blue delta represents this, right? So when we see blue delta, we know that the ask is greater than the bid. So there are more aggressive buy orders, right? There are more aggressive buy orders. So when we take that back to the chart over here, you see more aggressive buy orders, right? Here, 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 right? All these candles, 1, 2, 3, 4, 5. What's interesting here is this wick, right? We're going to pay attention to this wick here, for example, right? Lots of blue delta, which means there's lots of aggressive buying, right? There's lots of aggressive buying here, right? But if you just take a look at this level, were we able to break above this level? So this is ES futures on the 5-minute time frame. This is 67.19, 67.40, 4.45. Now, if these aggressive buyers were successful, they would have broken above 67.45, right, on ES futures. 67.45 was a key level, and we weren't able to break above that on 1, 2, 3, 4, 5 occasions. That's now going to be 5, 10, 15, 20, 25 minutes of price action, probably 30 minutes of price action, 35 minutes of price action, right? But what we can see here specifically is we see breaks below, we see this wick retest and a big break below, right? What do you see inside of this candle here, this candle here? What do these candles represent? What's going on here? So for those who want to kind of dive into order flow, let's take a look, right? So here we see a wick rejection, huge break to the downside. So again, we see 169 for 355, right? Blue delta. We see 203 for 342. We see 9 for 72. So throughout this entire kind of order flow, what we can see is aggressive buy orders are not able to break above the level, right? So we can see the market barely got halfway through or just above halfway through. This wick here, this is another example. So if you want to know how price creates supply, you're never going to get that from any of these concepts, right? You need to understand aggressive buy orders are failing, right? You have to know that. So again, if we just go and keep going forward, back in this presentation. So it's never a sweep of liquidity, a breaker structure, an inverse fair value gap, support and resistance. It's never any of these concepts, right? These concepts don't work. What you really need to understand is the two basic concepts, which is aggressive buyers fail and they get absorbed by passive sellers. And it's the passive sellers that creates the move downwards. So whenever you're looking at any kind of zone, you want to try and understand who is aggressive, right? Is the delta positive? Is the delta negative? And once you have that information, you can then start to piece together which direction break am I looking for. So for example, if you see a lot of aggressive buy orders and we see a break to the downside, this signifies the fact that sellers are really in control. We have a supply zone, right? That's literally what's going on. So that represents what's going on here, right? So supply outstrips demand, right? So what we can do is we can find an example, a flip, kind of a flip zone example. So the opposite. Let's kind of look here, for example, right? So here we had a bit of chop, but what's important to understand, this zone gave us somewhat of a bullish reaction. So we kind of rallied from 67.90 to 68.15, 16 area. So what was going on inside of here? Let's kind of dive into this one. Now, if we just take a look here, what we're really seeing here is we're seeing kind of, a break above the zone. But what we see here is a lot of aggressive selling coming into the zone, right? So there's a lot of aggressive sellers here, here, here. So all these candles over here. Now, what's interesting here, if we kind of dive into one candle at a time, this is a green candle. But what's interesting inside this green candle is we can see a massive red delta. In fact, this number here says 135 for 78. So yes, it's a green candle, but we see a lot of selling activity, aggressive selling activity inside of this zone, right? And this is the main reason why the markets rally higher, right? So even here, mini sort of break and retest, if we just take a look, this retest was full of 1, 2, 3, 4. So that's like 4 times 20 before this big move to the upside. So yes, we move higher, but what was going on upon this retest here? The retest signifies to us that aggressive sellers were present. But if these aggressive sellers were successful, they would have broken below the zone. But they weren't able to do that. And so this is how demand is created, right? This is how the market prints demand, right? And so this is what we have here. So again, if we just take a look, none of these concepts will help you. It's more of a case of understanding, in this case, when the bid is greater than the ask, we have negative delta. The aggressive sellers are more than the aggressive buyers. There are more aggressive sellers than aggressive buyers. And so when the market breaks higher, this represents passive buyers stepping in, right? And this is how basically every single market in the world works, right? That's how every market in the world actually works. So quick summary of what we've been through in this video. So again, you have, I guess 2 jobs, right? You have one job split into 2, find levels, and most importantly, use footprint charts to interpret whether there's supply or demand zone. So you never want to predict, you always want to react to what the market tells you, right? Predicting is scamming yourself, right? Whereas reacting is actually understanding what's going on. And so you use supply and demand zones, or you use footprint charts to determine whether you are at supply or demand, right? So again, sweeps of liquidity, you can drop them, right? There's liquidity everywhere. Market structure shifts will get you in too late. Fair value gaps or inverse fair value gaps alone are not enough. Support resistance, you don't draw lines, right? And you certainly don't draw trend lines. You don't draw anything on the chart, right? You draw levels and wait for the market to react to those levels. That will give you a solid indication as to whether to go long or whether to go short. Now, again, we've been through these numbers, so I'm not going to bore you again with that. You can go watch my previous video on that. So again, the analogy to use is the market's a story, and it's your job to read the buyers and sellers in that story before you make any kind of decision. Okay? And yeah, this is sort of my final slide. So it matters because price is not random, price is not an algorithm, price is not a bot, price is not something you can ever predict. You can only react to it. And so understanding where buyers and sellers are truly sitting are more likely to reveal the next move, which is what you want to try and catch.